Talk to the appraiser, interact with them, share comps, share data. It's not a black box and be just that we work through. So be happy to be there and provide info as it's needed.
Okay. Anything you want to add to that, Alex?
No, that's true. I think some appraisers might be a little resistant to that. So you kind of have to feel them out. But if they're okay with it, then opening the line of communication is definitely a good move.
Welcome to Agent Success Podcast. If you're a real estate agent looking to succeed in today's crazy market, well, you're in the right place. Each week, we talk with successful real estate agents willing to share their expert insights, trade secrets, and mindset that help them to succeed. There's no fluff, just straight to the point content that prioritizes one thing above all, your success. So without further ado, let's cut to the chase. Welcome to another episode of Cut to the Chase, agentsuccesspodcast.com. I'm Tim Chase, and I'm here with two special guests that will help you succeed in your business. They are appraisers, our favorite people. Why don't you guys go ahead and introduce yourselves?
My name is Bryant Vayhinger, current president of the Colorado Association of Real Estate Appraisers.
Okay.
And we've got an appraisal firm, Alex and I do, that we work together with that, and then do some appraisal management companies, so kind of the in-between. So we get to work with a lot of appraisers and agents on all sides of that process.
That is a lot of hats to wear.
It's a few, yes.
Yeah, it's a few.
Yep.
And how about you, sir?
Well, I share those hats with him. Other than that, the only difference is I'm a designated member of the Appraisal Institute, and I sort of have more of a reviewing QC kind of role at the appraisal management company.
Okay. Give me an idea. You guys work together. You guys own a company together. Is that accurate?
Yes, sir. Actually, two companies.
Two companies. Okay. Are you here based in Colorado Springs? Where are you guys based out of?
Yep, we're out of our houses.
Out of our houses. Okay,
Yes.
Cool. Here in Colorado Springs. So, as the tone of our show is, how does a real estate agent succeed with the knowledge that we bring? So, I have a handful of questions I think you guys could really help some real estate agents out. But before I do that, I want to just get an idea from you guys. What do you think, if you could give advice to a real estate agent, what should a real estate agent be doing to have more success in their business in dealing with appraisals?
Talk to the appraiser, interact with them, share comps, share data. It's not a black box and be just that we work through. So be happy to be there and provide info as it's needed.
Okay. Anything you want to add to that, Alex?
No, that's true. I think some appraisers might be a little resistant to that. So you kind of have to feel them out. But if they're okay with it, then opening the line of communication is definitely a good move.
Okay, cool. Well, let's jump into a couple. And actually, what you just said kind of goes exactly with my first question. So we have, let's say we have a new listing, and there's a mortgage that's being applied for, and so you guys are going out to appraise the property. Should the real estate agent meet you at the property?
I say yes. I appreciate when agents meet me. I realize sometimes the scheduling doesn't work, and in that instance, I'm working on a tight time frame, so it's more beneficial for me to go quick. But I do want that contact with them if they're available. Absolutely, meet me.
Okay.
Biggest thing is bring a packet, but bring it digitally. Email it to me.
Oh,
because it's
interesting.
easier for me to get it in my work file. As a piece of paper, I have to take that and scan it in and get it into my work file.
As opposed to printing off some recently sold from MLS.
Yes.
So,
Yeah.
Okay.
Yes. Email it over the CMA and bring it there and have that conversation with where you guys got your pricing and how you arrived at what you looked at.
Does that help an appraiser? Because there's thoughts that appraisers are just 87-year-old cranky men that don't want you to help them, right? So is that actually generally looked at? I mean, I know you say you guys do, but is that generally looked at?
That perception is not unwarranted. There are the 87-year-olds out there, but there's a lot of incoming people that are happy to work with it. With the organization that we're part of, we have been strongly encouraging appraisers to be more receptive to stuff that's being brought. It's a changing market. It is a pretty unique space. We need to know what buyers are doing. We don't get to talk to buyers.
Yeah.
The agents get to talk to buyers.
Yeah.
So we have to have that communication and that dialogue.
Okay. Do you guys ever, or does a appraiser ever actively reach out to the real estate agent for information, or is it more the real estate agent needs to be proactive to bring that information when you guys go appraise a house?
It's both, but a good appraiser will reach out to the real estate agent, I would say.
Okay.
So, some are...
So what you're saying is you guys have reached out to real estate agents because
Yes.
you said good appraisers.
Yes.
Would,
A lot of times. A lot of times.
Okay, cool. So I'm going to dig into a few details that I think could help a real estate agent understand. If you guys go out and appraise a property and it comes in under value, okay, the property comes in under value, what generally is the main cause of that? And I know there's 1,000 things that it could be, but what is kind of the main thing that you see, like a mistake or something that the real estate agent would have done in their CMA versus the actual appraisal?
I think a lot of times it can be a mistake. The square footage is wrong. They based it on an MLS, prior MLS, or the assessor, and there's actually 400 square feet less. That makes it difficult then to come up with arrive at the same value when all of a sudden the house is 400 square feet smaller.
So do you guys actually go out with the tape measure and measure it then, or how do you get to your measurement that's different than theirs?
We do have to measure. The new requirements per Fannie Mae is called the ANSI standard. That was enacted last year. And with that standard, we have to measure to the 10th of a foot, which is pretty precise.
Yeah.
And it standardized all of the finished versus unfinished and ceiling height for like a finished attic. And so we have to do that. And that is the process that appraisers are supposed to be doing, is measuring on site every time.
Why don't they just say within an inch and a half? What a tenth of a foot? Anyway, so are you guys using digital?
Yeah.
Okay, as opposed to running out the 18-foot tape measures and all that. Okay.
Yes.
So that's actually happening on appraisals. Because when did Fannie Mae do that?
Last April.
April, yeah.
Okay, so that's a fairly recent change.
Yeah,
Okay.
and Freddie Mac followed suit. FHA prefers it. VA does not require that standard.
So if a real estate agent goes out and lists a house, don't look at the county assessor, but don't rely on it. Look at past MLS listing, but don't rely on it.
Yes, absolutely.
Go to Zillow and then delete it.
They also have new rules about what can be counted as above grade and below grade and how to report that. So buy levels, for example, are always going to be half basement as far as we're concerned.
Okay.
Sometimes the assessor and agents will list it all as above grade, and that can cause a little.
Can
bit
you
of
give us a little more explanation on that? When you're saying like a garden level basement?
If anything on that floor is below grade at all, that has to be counted as basement level.
Okay.
So if 1 inch of that property is below ground level in one spot, that whole level has to go below grade.
And so I've noticed when I look at like the county assessor, like for taxes, as an example, a house will say it's 1,100 square feet, and maybe it's a bi-level, but then it says, basement is this much, but it's telling you that it's 1,100 square feet is kind of the what it's going off of. So when you guys go and do that appraisal, are you valuing that 1 inch below grade at a lower value than above grade?
Typically, no. We're supposed to be measuring.
You just have to mark it. You have to label it different.
Yeah.
It's not necessarily valued different.
Yeah, and that's where the tri-levels or 4 levels really become an issue, because a 4 level ends up typically being 2 up and 2 down, and the assessor almost always has it 3 up and 1 down.
Okay.
So a lot of people think that we forgot a bunch of square footage or we forgot bedrooms and bathrooms, and they're just included in that below grade now because of the new measurement standards.
Gotcha. So when you go on your appraisal report, it's listed. It's just not listed as square footage, and then you have below grade square footage.
Correct.
Is that,
Yes.
Okay. Interesting. And then what about with a real estate agent that wants to get their accuracy as good as possible right out of the gate? You're suggesting that they should use digital measuring things as opposed to assessor sites and all that, right? When they go and do their CMA using that, do you see them using a different value on above or below grade?
Not traditionally.
Okay.
No.
So they're doing it the same way you're doing it, I guess is really the point of what I'm trying to get at. They're valuing it the same, or they're trying to.
They're trying to, and a lot of it also, of course, comes down to what the buyer and seller see. If they see there's 4 bedrooms and 3 bathrooms, then that's kind of what they're buying, regardless of how we report it. So the ANSI stuff kind of confuses that, but
So then you said the square footage. What about house type? Like, let's say you're doing a house that is fairly unique for the area. Like, what is the standard a real estate agent should look at as far as how far out do we go for a comparable property for like a normal single family here locally? Like, what would that be? And then if you do that unique property, how do we start finding comps for that? Do we go further out, or do we go less further out and do a less comparable property? Does that make sense?
Yeah, that makes sense. You're really going to have, it's going to vary per appraiser, which is the typical appraiser a lot of them get locked into this 1 mile radius.
And that's what I've heard traditionally.
Yep. And that we're trying to bust that mold because buyers aren't looking at properties within a mile of some random point.
Yeah.
And so as we work with a lot of appraisers through the AMC, we try to encourage them to look at the broader market area. Where is that buyer actually looking?
Okay.
And so we can't get around location, though, because it's kind of the 3 rules.
Okay, what are the 3 rules?
Location, location, and location.
So there's not a 4th in there.
There could be more location. So if you've got that unique property, find some stuff that's close, that gives you them that proximity to the subject. But then also look at something that might be farther away that's going to match the property better and be like, here's the quality.
So to get more specific, let's say so you say 1 mile is kind of the norm, right? Is the, I shouldn't say norm, but the perceived limit.
For a lot of appraisers, yeah.
Okay. So let's say I have a ranch, and everything within a mile around it is split level, duplexes, tri-levels, everything else, right? But I got a ranch. And 2 miles away, there's some other ranch level houses. Are you guys, and I know this might be a little bit of a loaded question, but is it better to go out to that 2 mile to find the ranches, or is it better to make the adjustments to non-comparable houses?
You need to bring at least one of those 2 mile out ones in. That would be my sort of baseline answer.
Okay.
It always depend.
Sure.
If it's a crazy ranch and like only these 2 mile out ones are comparable, then these ones closer by are frankly useless. Even though I'd probably bring one of those in as well, just to have something.
Just to give a locational value to what houses are going for there, but you're going to reach. So even if there's a lot of other houses, right, you're reaching out and grabbing at least one of those comparable properties. And bringing them. I've run across that before where I've had one just odd house that I shouldn't say odd, but it was odd for the area, and they have to go pretty far out. Do you guys do any mountain town properties?
Yeah, we'll go out to Westcliff or all at Teller County and Park County and a lot of those areas.
And so that's where I've run into some stuff before where it's like they're going out 4 miles away, 5 miles away,
and
20 miles away.
And that's where an appraiser needs to judge what is that market area, and looking at not just a subdivision, but in mountain stuff, it gets so spread out that you have to be farther away.
So how does that work? Let's say, and again, for a real estate agent standpoint, you go to list a house, and the house you list is between here and Cripple Creek, kind of mountainous somewhere, right? And it has 20 acres on it. How much value are you putting to the land versus the house, or is it all just collectively into what the comparables within a 20-mile radius are? Does that make sense?
Yes.
Well, just because I see sometimes it's like I have a 40-acre lot or a 20-acre lot. It's like, okay, well, boy, the land sure is but we're lending on the house. So how does that start to play in?
Again, you got to bring in stuff to match that land. Hopefully, the view and the outbuildings and stuff like that. So it can get pretty complicated.
So what if one guy likes the view and one guy hates the view?
We have that with solar. I've run into that with solar. Some people are just like, yeah, I don't care. Get rid of it.
Huh.
Like, they'll literally be like, just take it off. I'll buy the house, take it off.
Really?
I don't care about the price. You can keep
I
the
hate
price
being
where it is.
energy independent. way rather wait for the utility
So
company.
you kind of have to look at what the market wants. In that case, that people do. I would prefer solar to not solar.
Yeah.
That's a pretty easy one. But you do have to look at that. Some things aren't popular. Like an in-ground pool is not that popular. Some people will be into
in the
it.
mountains, yeah, I could see how that would be. Yeah.
Yeah, especially there. Yeah.
Yeah.
And one
Ice
thing
skate
that
in the winter.
we'll do a lot of times for within our firm, and it's becoming a broader accepted topic, is figuring out that base land value, and then comparing that against comps based on their land value. And so 4 acres in closer to town with better views will have a higher value than 20 acres farther away with no views.
Gotcha.
And that idea of, well, they might be different in size, but if we go back to that base land value and we take away all the improvements, that can be something that starts to give us a better idea of how that value is coming in.
You guys got to, that'd be a tough job. All I have to do is look at Fannie Mae guidelines or Freddie Mac guidelines. Like, your DTI's off. I don't know what to tell you. You guys are like, well, I had to go 40 miles here and 10 miles there.
Well, I had a property that probably the craziest one I did. That my market area, defined market area, was the state of Colorado, and I used 10 years. 10 years.
10 years in the state of Colorado.
Yes. It's an earth ship.
Oh.
A rammed tire, earth built, self-contained property that you sail through life.
That's fantastic.
Yes.
I was going to actually ask about different buildings, such as hay bale, tire, all the different. If you don't have anything around, are you using the normal houses as comparable properties?
Got to get one in the location.
And get
10 years in the state of Colorado.
Well, and that one was there's only 3,500 of these things built. They originated in Santa Fe, and so it was like, look, 3,500 in the world.
Oh.
So if somebody's going to want this, they know what it is, and they're going to want only one of these things.
I kind of want one.
Well,
where do I find these?
There's a lot in Crestone. Go down.
Yeah.
2 in Black Forest.
Really?
Yeah.
Okay, that's interesting that you know that. You're like, dude, I know everything for the last 10 years in the state of Colorado.
Yes.
Yeah. Creston's different type of town.
Yes.
Yeah. I've done some loans down there actually for people that have just got cabin-ish type houses, but I know several people that have some property down there, and sometimes they just build whatever they feel like building.
Yep.
So,
And
whether that's a teepee or whether it's whatever it is, right? A yurt, yeah.
We have situations with some of that unique construction, though, that we'll look at them and not be able to actually prove value. We might not have that comp that's a similar construction in the report, but we'll have done it on the back end where, say, an insulated concrete farmhouse. Those are really efficient. And if we find a sale of one of those and look at it compared to other houses, did it actually sell for a premium?
Yeah.
And when we compare that one, it's basically like a mini appraisal of that house versus the other comps to see if people were willing to pay more for that feature. And if we can determine that they didn't pay more for that feature, then we might not include that in the actual the sales grid.
That's a great explanation. I would like to break part of that explanation down just a little bit. If you had to tell a real estate agent, like they had to tell a client, like, what is an appraisal? Like in a very condensed form, like you just like a one sentence. What is an appraisal?
Risk analysis tool for a lender.
Okay,
That's pretty good.
oh, that's not too bad. Yeah. I'll give him an A- on that one. That's not too bad. So it's a risk analysis tool.
Absolutely, and it's for the lender. It's not for the buyer.
Okay.
It's not for the seller.
Okay.
Because it's a matter of we are providing a piece of information for that lender to decide how it ties in with the credit score and all the other factors that you get to deal with that I don't want to deal with.
So I have heard in the past, a real estate agent told me that an appraisal on a purchase is a justification of the sales value. An appraisal on a refinance is the value. Does that make sense? Like whatever value they can come up with, whereas the purchase is a justification of that value. Does that sound accurate at all?
That's accurate, but we're not supposed to think of it in those terms, I would say.
Okay, because a lot of times we have a house for $593,111, and the appraisal comes in at $593,111. Right? how did that happen? And it made me think that maybe there is some truth to that statement that a real estate agent told me a long time ago. Hey, it's just a justification of the sales price.
It is. Does that make sense? Can we support it?
Okay.
And it's a strong data point. And that's where additional offers can be a good tool for an appraiser to have. If that agent that comes in and can show a spreadsheet of all the offers that they got on a property and say, like, not only was one person willing to pay this, we had 6 people that wanted this.
And that actually is a very good point. So you say meet at the property, deliver your comparables in an electronic format, but then when it comes down to getting that value, getting actual, like, hey, here is 9 offers that we had on this property, and would you suggest that's part of what they send you in that initial?
Absolutely.
Okay. Interesting. All right. I didn't think you guys would look at that.
I find it useful. I mean, it's true if it's true. And I think some appraisers will be like, well, I can't use that. That's kind of true. You can't put that in the grid or anything. There's nowhere in the appraisal report to write that. But it's market information. Yeah.
Do you appraise new homes different than resale homes?
With new homes, we have to include something that's not the same builder, that's not new, or something that we can't just use all new all new comps from the same builder is kind of a frowned upon practice, because then that builder
price fixing.
Exactly.
Yeah.
And so that's it. Really, the only difference with the new construction is looking at it that way.
So you might need to jump to the next community over with a different builder or something like that to get that.
Or a resale, even if it's a resale of the same builder, that shows that on the back end the market's still supporting those values.
It just can't be that builder's inventory of new stuff.
Correct.
Now, are you looking for just one, kind of how you said you're going to go out and get that one random property? You need at least one in there, or?
It depends, because we prefer always MLS sales, and some builders don't bother. So you'll have just all not the builder of the subject in your sales grid. But
gotcha. Okay. No, that makes a lot of sense. Some appraisers, or not appraisers, sorry, some real estate agents get confused when we have a value that comes in low. Particularly with VA, we call Tidewater. So if there's a real estate agent listening, they have never had Tidewater, that's when an appraisal comes in low, and we don't get to see the value on a Tidewater, right? It just says we got Tidewater, right? Like we're running low. So how should they handle that? How should the real estate agent handle that?
Look at the report first and see which comps are in there. There's a lot of time.
The appraisal report?
The appraisal report.
Well, but on a Tidewater, we don't get that.
Well, then can they ask the lender for a copy of the sales grid to see which,
or even just a list of the comps?
The appraisers don't give us any of that.
Okay.
On the Tidewater, they basically say it's Tidewater. Let me know in 2 days.
Yeah. See, and VA doesn't tell the appraisers the process on that one. We just get.
Oh, so you submit it to VA and you don't.
Well, we have to go to the lender, but it's that idea of, on the appraiser side, most appraisers don't know what happens on your side.
Gotcha. And we don't know what
the
happens
process.
on the appraisal side.
Yeah, it's a big.
I just know you get the value wrong. Gosh, dang it. So what we've been sending is, when we get a Tidewater, we send out to the real estate agents, and we got a form from VA, and we put it into a nice, fillable PDF, and says, here's a grid format. Give us where, some stuff to justify this.
And some of the best things that they can provide will be sales that are over the contract price, that have closed higher. That doesn't mean just any old random property that sold higher, because it's like, can I find a house that sold? But something that sold higher. A lot of times we'll get Tidewater and it's everything is lower. Well, that doesn't do anything to help us bring our value up when everything's below the contract.
I think a lot of that can be solved in the front end by meeting you at the house, delivering both offers that they received on the house and closed transactions right out of the gate.
And information. I always tell realtors that we can find the high sales. We can find the sales that were higher. It's the lower ones that we need explanations of. This one looks exactly like the subject, but if you've been in it and there was a smell in there and there's problems, that's good information for us.
I had a realtor tell me one time, smells cost money.
They do? Yeah.
If you got cat smells, it's going to cost money. Okay, so we're going to go really fast in these last couple that I just have a couple quick questions on. First one is, do you hate AMCs?
We have one. We own one. So we're a little biased on that side of not being able to say that. AMCs can be a great tool.
Yeah.
There's also some that don't run correctly and are not very.
Some of them can be very frustrating from the lender standpoint. We can't get a hold of people. It's a lot of back and forth. It's a lot of middlemen. And
It's like anything in this industry. You're going to have some good, you're going to have some bad, and you're going to have some middle of the road.
from an appraiser standpoint, though, right? From an appraiser standpoint, would they rather work client direct, or would they rather? Do they like having that level of separation with an AMC?
I'd say most appraisers prefer the client direct.
Okay. Yeah. All right. I liked it better before AMCs, but I also kind of like when I get a good AMC, the accountability that an AMC provides. So it's like, well, no, we talked to your person who was supposed to talk to that, and there's like a paper trail of information. We've had appraisers, particularly mountain appraisers, that just kind of disappear from time to time. They show up once a month and.
We definitely try to be one of the good ones.
Yeah, they call it going dark in the AMC world. That appraiser went dark, and who knows what happened.
So we have 2 more minutes. So I'm going to ask 2 really fast questions. Okay, the first one is, let's say you're going to get FHA or VA appraisal. Okay, can I have that easily converted to a conventional appraisal? If, like, let's say you guys went out and did an FHA or VA appraisal, and I say, oh, well, we're switching to a conventional loan. Can you switch that to a conventional type of appraisal?
That should be easy and inexpensive, as long as it stays with the same
Okay.
lender, or you're able to transfer the appraisal.
What if we switched that role? You start with a conventional, and then you need to go FHA. Is it a full reappraisal, or do you just go out and inspect a few items?
You're going to have appraisers who say that's full price. We're doing a whole new one, but it shouldn't be. That's
Okay.
For FHA, it's a picture of the attic real quick and the crawl space, and was there any peeling paint? You should be good to go.
Health and safety issues, is that accurate?
Yeah, and that only will come up when, if you've got a conventional that appraiser might not be on the FHA or VA roster, then all of a sudden
gotcha.
they're not able to do that. They're not able to switch it, and so it will end up being a full new appraisal.
So it is possible, assuming that they're on that.
Yes.
Okay, last question I have for you guys for real estate agents, and this got brought up a couple of weeks ago with an agent. Is there any value, and what do you guys think about having an agent before they list the house, hiring an appraiser to do a drive-by appraisal to get a value? And would that hold any weight in that value?
It'll depend on the appraiser. Depends on the property too. For an easy one, don't bother. But it's some of the tricky ones. There's a guest unit and how big lot and all that kind of thing.
What does a drive-by on average cost? I mean, it's different all over the state. You go out to, Woodland Park, Cripple Creek. It's different than Colorado Springs. It's different than Denver. Just kind of average. What does an appraiser charge? You're going to say between $200,000 and $9,000, right? Somewhere in between there.
Yeah, as all appraisers, we say it depends.
It's like when somebody asked me what the interest rate is. Well, that's an interesting question. Is what that is. Yeah. We got to go down a big rabbit hole to figure that one out. So.
200 to 300, I would bet, is going to be it depends on who you go to, but that would probably be ballpark. And
so a more challenging property, maybe that's not that bad. And then would that if that happened, and you did, let's say you were doing the actual appraisal, and they show up to give you information, they give you this drive-by appraisal that they had 2 weeks ago, that would help you do your job as the appraiser.
It could absolutely help to give a perspective of a different appraiser.
Cool.
And sometimes that, if on those tricky properties, the drive-by is probably not going to be the best bet, but get them in there, get them to measure, and then you can have that true measurement as well.
So real estate agents, start measuring your properties.
Or call appraisers to measure.
Or call an appraiser. Start meeting your appraisers. Deliver information digitally. Don't be invisible. And love AMCs, I guess. Yeah, is that
love our AMCs.
Accept AMCs. So for a real estate agent, if they wanted to reach out and do something independent of a lender, how do they contact you guys?
Our AMC website, Mosaic Valuation Services, can get to us.
Okay.
Our appraisal firm website is being built right now.
Okay.
But
so
call,
Mosaic,
email.
What was it?
MosaicValuation.com.
Okay.
I think so.
You guys worked the system real good. You didn't build the website.
Yeah.
That's good. And how about phone number if they need to call?
Mine is 719-291-7244.
Okay.
And call me anytime with any questions about appraisal.
Awesome.
love to talk.
How about you, Alex?
719-725-1003.
These guys are awesome. Thank you for being here. You guys are legit. You know what you're talking about. I think you really brought a lot of value. We did hit exactly at that 30-minute mark. I told you we're going to try really hard to be on. Really, it's hard to do, but thanks a lot. Hopefully a lot of real estate agents got a great value out of it, and thanks for being part of the show.
Yeah, thank you, Tim.
Right on. All right, that wraps up another episode of Cut to the Chase at agentsuccesspodcast.com. Catch us every week. That wraps up another episode of Agent Success Podcast. Remember, you can find new episodes each week at agentsuccesspodcast.com. We hope you found the insights and best practices shared today truly valuable. And if you did, please subscribe, rate, and leave a review on your favorite podcast platform. Remember, your success is a journey of learning and improvement. So let's keep hustling, thriving, and learning. Until next week, this is Tim Chase.